How to deal with inflation in a business? We're going to answer that question in this video. Okay, let's rock. Let's talk about dealing with inflation with our businesses. What the heck? Every year things go up. How do we stop that? Okay, I'm glad you asked, because I still, as of shooting this video, own several different businesses, and I have to deal with this as well. You know, we're dealing with what? Ongoing labor costs going up as time goes, materials going up, hence everything's pretty much going up, right? So because of that, and some of you even the lease rates are going up. So because of that, you've got to figure out, how the heck do I keep up with this? I mean, if my lease rates keep going up, my labor keeps going up, my cost of goods keep going up. I mean, I know what's going through your head. Eventually, I'm not going to be able to afford this. Oh my gosh, I'm going to go out of business. Things are going to get too expensive. Okay, I've been there. Stop, slow down. There's a way to protect yourself. And it really, truly depends on the business that you're in, okay? Every business is different. Let's say you're in a restaurant business, completely different than me being in the precious metals business, me being in a entertainment business like axe throwing or escape rooms, or me being in a trading card business, right? All these are different. I mean, some people are just simply in the real estate business. I'll tell you what's beautiful about real estate, as time has shown. I'm not predicting the future, but as time has shown, just being a real estate owner, so whether you're buying it to hold it and rent stuff out or you're flipping, as time goes, real estate goes up. So that's kind of one way to hedge yourself against inflation, is to buy residential homes, or if you can afford commercial real estate, and hopefully you can have enough tenants that are paying you your rent, right? So you could afford your note and things like that. If you can afford real estate long-term, real estate values have shown us that they continue to climb over time. Now, rarely is it a get-rich-quick scenario. Now, there's plenty of properties you can buy. You can buy a foreclosure, get a great deal on it, flip it to somebody else and make a bunch of money. Lots of people do that. There's plenty of money. But like the slow metered growth route is usually what most people do. They say, hey, I'm going to buy a house. I'm going to get a good tenant, somebody to rent it from me. I'm going to own it for 10 years. I'm going to own it for 15, 20 years. And you know what? Over time, that house might like double in like 15 or 20 years. I know the house that I bought 15 years ago has doubled in price. I don't own it anymore, but the value we had paid for it versus now it's twice as much to cause it, to buy it. That's inflation. Inflation's what caused that. That's literally what happened. So in your business, depending on the kind of business you're in, let's talk about how to deal with it, because that's what you're trying to get out of this video. Okay, if you're in the restaurant business, you know, labor costs, material costs might continue to go up. So the short answer is you're going to have to raise prices on your menu to keep up with inflation. You got to be careful, of course, to make sure that you're not raising prices too much. And you can do this with any business that's got products, right? If your material costs are going up, let's say you're in some kind of print business, right? Where paper costs go up or something like that. And you're a magazine or something, and you charge advertisers to advertise. In that particular example, the advertisers ultimately are going to have to pay you more for those ads because the paper costs went up. So your costs went up, and so your advertisers got to do that. Now, it's a fine line though, too, because you got to be careful not to lose your advertisers if you're, say, that magazine. Because if you raise them too much or too fast or too often, people might just say, you know what, come to think about it, I don't really want to advertise with you anymore. And you're like, whoa. So you were trying to keep up with inflation and try to make an extra 3 or 5% on your advertising costs by recouping it by charging your people more, your advertisers more, and they quit. You know, they said, no, I'm not going to do this anymore. So it's kind of that fine line. But the way you deal with inflation in those businesses simply is you got to raise your prices. And I know it's not like what you want to hear, because first thing that goes through your mind is, well, people might go away. I might not get as many customers. Well, that's why you be careful to slowly raise those prices. You're not going to raise prices on your menu like 5 times or 10 times in a year. If you do that, you're probably not going to have any customers. Or you grossly underpriced all your stuff to begin with. I mean, maybe it made sense to keep raising the prices because you were just starting out as like a grand opening, super cheap or something like that, and you wanted to earn customers. And I've seen that strategy. I mean, the first thing that comes to mind, I remember this, back in like the late 1980s, if I remember this correctly, we had White Castle open up here in Overland Park, Kansas. And I remember when they were advertising, this is a true story. They're little tiny hamburgers. And you know White Castle hamburgers are small, like they're like maybe that big, right? Their White Castle hamburgers were 19 cents a piece plus tax. 19 cents, not even a quarter. And you could get a cheeseburger, just that extra slice of cheese was 29 cents. It's kind of funny, like one little slice of cheese was another dime. It just didn't make sense, but it was 19 cents and 29 cents. And now if you go to White Castle, those same little tiny burgers, last I went, I think they're like $1.50 or something like that. These suckers have gone up a ton, right? So White Castle could not afford to stay in business if they were still charging 19 cents for burgers. And one thing I do remember, as time went, they raised those prices pretty aggressively. Like within a couple years, they might have gotten up to 49 cents, which is still cheap compared to today. But you got to think back to say 1989 or 90 or 1991, those kind of years. To go from 19 cents to like 49 cents is over double, right? 2.5 times. That's a lot. That's huge. But what they did, I think their strategy was they wanted to earn customers. They wanted to get people excited, because when you offer something at such a super low price, it's such a deal, people get such a value, they're like, holy cow, how do I not go there? I mean, $3, I get a lunch, I get like 10 burgers, I can take some to my friends back at the workplace, I get French fries, I get a soda with a combo value meal or whatever. It was a great deal, okay? So again, in the restaurant business, as time goes, unfortunately, you're gonna have to probably raise your prices, and there's a lot of other businesses where you're gonna have to do that. That's gonna help you deal with inflation. Let me talk about what I do with my gold business and my collectible business. And this is something that I've done for many years. So it's not like something I just thought of yesterday or last week. It's something I've done for many years, and it's worked well for me. Maybe it doesn't work well for everybody else. But if you own a business and you're trying to say, look, I've got all this money in my operating account, it's just a bunch of cash. We don't need it. I mean, we're in a spot now where, we're rocking and rolling, and the payroll's roughly the same, the rent's the same, and, we have enough customers coming in that we can pay our bills. But we have this like surplus of cash that we just like to keep as kind of like a, just like a cushion. They don't want to ever run out of money or have to put more money in their business, so they just keep a little cushion. And most business owners do that. I do that. I enjoy having a little more money in the business account, the operating account, than I need. And so you end up having this, and you say, well, wait a second. Here's one way I can keep up with inflation. And I do this with the other businesses, is I invest that money into the things that each of those businesses are into. So like in the gold business, we might keep some gold and silver on hand, right? Just as a hedge against inflation, because we don't want to have all money. If you have all money, we already know that the value of money decreases. The purchasing power of money decreases year over year over year. Since I've been alive, there's never been a year that inflation hasn't happened. And I'm in my 40s. I mean, that seems like, I know for some of you that are super young, you're like, you're a fossil. And for some of you that are a lot older than me, you're like, you're a kid. I get it. I'm sorry. I'm never going to be super young anymore. I'm never going to be super old right now. I'm sorry. I'll get there someday. Not looking forward to it. But going back to that, I use this and I sit on stuff. So I might say, and I'll just use an example. I'd be like, okay, we've got an extra $10,000, that we don't need to have in the operating account. So I'll say, okay, I'm going to go buy $10,000 worth of gold. Well, history has shown, you can Google this, you can chart it and see how much has gold averaged, how much has it appreciated in value, in price for the ounce of gold, how much has it appreciated in value over the last 50 years? Just look it up. Well, it started 50 years ago at about $100, and now it's about $1,700. So divide that by 50, and it's something like 3% or whatever. So it's kept up against inflation. And I know there's going to be people that correct me down to the, thousandth of a decimal or something like that, but you know what I'm saying. Like inflation, say gold's gone up about 3% a year on average, and inflation's probably been 2 or 3% on average. And I haven't looked it up, and I'm just kind of guessing. So if you had bought gold 50 years ago and you just sat on it, you're going to basically have the same purchasing power. So you've basically protected yourself against that inflation. That's how you do it. And that's how you can protect your business, so that you can kind of make your business stronger. So as the years peel off, if you don't need that money, you basically hold some of your company's assets in alternative investments. And it doesn't have to just be gold. Maybe your business has enough money to buy some real estate, and you buy a building for your business. Well, that's a great way to start maybe investing your money. I mean, you have to look into that and consult your financial advisor. Maybe your financial advisor says, hey, let's put some of this money in the stock market and let it ride for the next 10 or 20 years, right? Maybe they want you to put it into bonds or something. I mean, I don't like bonds. I don't invest into them. It doesn't mean it's right or wrong. That's just not my cup of tea, right? And maybe if you're super hyper aggressive like I am, you're like, I'm going to buy some Bitcoin or some cryptocurrency or something like that. So one way to protect your business against inflation, right? How to deal with it in a sense, is to consult your financial advisor, people that you respect in business, people that you respect in investments, and find out what they're putting their money into. Because if they're putting their hard-earned money into it, yeah, there's probably a good chance that it's a pretty good investment to be in. And not every investment's going to pan out. You got to learn that if you haven't figured that out. You've got to learn that not every investment's going to pan out. There's going to be some losers. You're going to lose money, which is why I highly recommend only putting a percentage, basically allocating the total amount of money that you have, just putting a percentage of what you have into each investment, so that way you won't lose everything. So as an example, if you had $100,000, I know that's a ton of money, but we're just using it as an example. Don't put all $100,000 into the stock market. Don't put all $100,000 into gold. I mean, you can if you want, and it might work out for you, but it also might not work out so good. I mean, there were times when gold was super high and then it crashed, and you would have lost a lot of money, and it's rebounded since, but you get the point. So basically, break it up. They call it diversifying your assets, right? So take your money and put it into, I would say, I don't know, 3, 4, 5, 6, 7 different, asset classes, different things, and just be patient. Not everything's just going to go up. Just some's going to go up, some's going to stay the same, some's going to go down. And in the end, if your financial advisor knows what he or she's doing and they've been experienced, you should be able to see your money increase over time. Maybe you average 6% or 7 or 8%, return on your money over time, which is not only dealing with inflation, keeping up with it, but actually beating it. So you're making money. Okay, everybody, I hope this video was helpful. Hopefully I shed some insight. If you own a business, maybe this will help you out, last longer, and deal with this nasty thing we call inflation. If you like the video, please click the like button, and I'd love to hear your comments. Any ideas on future videos, things you liked, things you didn't like, hey, give it all to me. I could care less. No, I would love to hear your feedback. And please don't forget to subscribe. Click that subscribe button so I can keep delivering you videos. Remember this from me. I will keep preaching this. In business and in life, it's never easy for anybody. And no matter how hard it gets, never give up, keep pushing, and be the hustler.